Welcome everyone to the Kiyotaka Aggregated TPO guide. I'll be walking you through the settings, how to interpret the TPO, and how to derive key levels that you can use to form trade ideas. So to open up the aggregated TPO, you're going to head to the indicators tab at the top, type in TPO, and you're going to get your aggregated time price opportunity chart. Excuse me. I'm a little bit sick, but I love crypto, so we're here. Now, this is going to open up many profiles across your screen. This is a TPO profile, a time price opportunity chart. And what it represents is basically where the market spent time trading during a session. So each block is formed when the market spends time at that level, and price levels with more blocks stacked horizontally represent where price spent more time trading. You can see it's evident from the point of control, which is the level where the most amount of time was spent trading during this session. And then this has the most white blocks. It's denoted by white, and it has the most blocks stacked horizontally, whereas prices with little trading activity, where not a lot of time was spent trading there, are denoted by areas with less blocks. Now, next up you have your value area low and your value area high. These just represent the extremes of what is called the value area. The value area is the brightly highlighted blocks compared to the less opaque ones outside of the value area. And this is where the market spent 70% approximately of its session time trading within. So it's a range where essentially if you took, an easy way to think about it is if you took every single price level that was traded during this session, wrote them down on a piece of paper, and you threw them into a hat. If you were to pull one piece of paper from the hat, there is a approximately 70% chance that you'll pull a piece of paper with a price that's somewhere inside this value area, right? And this is based on the normal distribution, the Gaussian distribution, or also called a bell curve. And what this is, it represents the random distribution of outcomes within a given session. So here you're going to have your average. Some of you, this is already familiar to many of you, I'm sure. This is your mean, your average price of the distribution, and you also have your first standard deviation of price, and this collectively represents 70% of the area under this bell curve, right? So the probability of outcomes, 70% of outcomes occur within this range, and that's what the value area represents. Why that's important to you as a trader is because the market inherently operates randomly, but it's based on buyer and seller activity. And so since you can't get, there's no 100% guarantees in the market, everything is random. All you can do is use data in confluence with each other to stack the odds of success in your favor, and that's all rooted in probabilistic expectations of outcomes. So we can dive into the well, actually, before we get into the settings, I want to touch on the skew of distribution. So this is a theoretical model, this bell curve, and in practical applications, you'll notice that there's varying shapes and sizes. So this is most accurate in ranging days, and it's less evident in trending days. And this brings us to the states of inefficiency and efficiency, or imbalance, or balance as efficiency and imbalance as inefficiency. These are the fundamental states which govern the movement of price in the market. And what this means is when you say balance, you get ranging price action because price is governed by supply and demand. Supply demonstrated by sellers, and demand demonstrated by buyers. And when you have an equal distribution, or a relatively balanced distribution of buyers and sellers at a given price, you have ranging price action. Whereas in aggressive trends, you get strong imbalances, right? This market, this session opened up at these highs here, and it was immediately in a state of imbalance. There was excess supply and lack of demand willing to buy at these premium prices. And so, in search of fair value, the market traded downwards until there were responsive buyers willing to participate consistently for a prolonged amount of time. And that's where you get the term fair value or value area from, right? Because within the value area, you can consider these prices to be fair value. And the most fair value price of this session is at the POC, which is why the market spent so much time there. So I like to use this framework of balance and imbalance to form expectations for drawing key levels, and we'll get to that in a second. But first, I'm going to take you through the settings. So to open up the settings, you can hit your aggregated TPO badge or just click on the gear here. And at the top, you'll see your exchange options, right? Why this tool is so powerful is because it allows you to aggregate data from multiple exchanges. Since crypto's traded 24 hours a day, 7 days a week, and the exchanges are all over the world in different time zones, it makes sense for a trader who wants to study order flow and market participation. It makes sense to aggregate the data from multiple exchanges so that you get a full picture of market participation. And you can add futures, or you can just focus on spot markets if you'd like, right? And you can look for divergences or differences, discrepancies between the spot market and the futures market, and extract signal from that. So I'll just put this back to our default settings here, and stick it with the big five. Shout out to Hyperliquid. But next up, you've got your session type. So you've got daily sessions, you've got weekly and monthly. And what this will do is aggregate the TPOs into a weekly distribution if you're on the weekly chart or weekly setting. If you're on daily, there's one session per day. Next up, you've got your trading hour. So Kiyotaka's pre-built some templates for us where we can choose common hours that are traded throughout traditional finance and now cryptocurrency markets. You've got your Asia session, which you'll notice the start time changes at midnight UTC, which is market open, and it ends at 6 a.m. UTC, and then it leads into the London session, and then New York, and so on and so forth, right? And if you want to look at, for example, just New York flows each day, you can do that, right? Because New York is typically the highest volume session, so it gives you a good picture of what institutions that are active at that time, what they're doing, whereas, well, not necessarily just institutions. I say that because the TPO is really good for identifying where the aggressive participants are willing to react, right? And so if you know that price spends less time there, right? You know that there were aggressive participants buying up this level, which is why price spent such little time here, versus markets that are more balanced. These are favorable conditions for large players to do business in, right? Because they don't have to worry about slippage at inefficient prices, where there's a healthy supply of buyers and sellers readily available to them. They can segment out their large-sized positions and average them out across a range where they're getting fair value for their prices. Now I'll put this back to the default settings here. You've got your time zones. Also, if you want to do custom sessions, you can do that. You can save them as well. Test. And right, you can go 12 to 7 p.m., for example, then you can save that, and that'll be your test. It'll have your label up here with the time you've laid out. Next up, we've got the time zone. So you got UTC or Eastern time. This might be because I'm located in Eastern time, but I prefer to use UTC anyways because this is a global market, right? And there's exchanges all over the place in different time zones. So this is the standardized metric which exchanges use to, to govern the clocks in their market. Next up, you got a block size and show letters. So I'll throw the show letters on here so I can explain this really easy to you real quick. Let's find a nice one. Okay, so what the block size represents is you see it's by default set to 30 minutes, right? So on these blocks, they're labeled with letters based on when those prices are traded chronologically. And since this is set to 30 minutes, the group A will contain the first 30 minutes of trading, and then the group B will contain the second 30 minutes of trading. And this goes from capital A to lower or capital Z up here, and then lowercase a all the way to lowercase z if need be, based on when those prices were traded throughout time. And so if I want to, like, if you look here at the range of A and the range of B, right? So the extreme is here and here. And A and B, since it's 30 minutes each, contain the first hour of trading. But if I want to condense this chart a little bit, I can just double it to an hour. And now you'll see that same range is all just letter A, right? And then the B contains where C used to be, and so on and so forth. So this is really useful if you want to go on a higher time frame. You can have a decently condensed chart, um, just more data in each block, and you can adjust that to your convenience. Next up, we've got the volume profile. Oh, then show letters will toggle the letters on and off. Um, this is good, you know, if you care about when prices were traded at the beginning of a session. Oh yeah, this brings us to the initial balance range as well. The initial balance range is the first hour of trading by default. We'll get into that later in the settings, but that's what this white line is on the left of your profiles here. Next up, we've got the volume profile. So this is also another useful tool for getting a real good read on the market. Now, I like to use these tools in confluence with each other. You can adjust the position left or right, and you can choose total volume, with the green representing buy volume and red representing sell volume, and then the delta just representing the difference between buy volume and sell volume. And why I like to use them in confluence with each other is because you can see here the POCs are slightly different. And why that is because the TPO POC is based on time spent, whereas the volume POC is based on transactions occurring, the number of transactions occurring, which is denoted by, if you go show values here, it'll give you the number of Bitcoin traded at each price level. But why I like to use this is because this gives you a full picture of supply and demand given during a given session. So if I, for example, I put a box around here, I know that this is the fair value, right? I want to highlight this as a point of interest as I trade forward into time, right? And if I just if I just turn these off, right, you can project this out into time, and you can see that the next day it trades more in this range before there's imbalance. There's a lack of sellers, excess of buyers, and so price searches for fair value upwards. Eventually, that trend gets exhausted as buyers aren't willing to pay higher prices, and they probably start taking profits at these highs. So the market enters another state of imbalance, and it searches for the next region of balance. And as you project this forward into time, you can see that you can have targets for your trades where you're targeting areas of balance because you know that the market is searching for fair value, right? So if you're trading a breakout, right, which is imbalance, right, maybe not a breakout based on the TPO, but maybe a breakout of this range here, right? You know that the market is in balance and it's ranging. It's finding balance here. This is where buyers and sellers are showing up, and then you catch a second move, right? You catch maybe the breakout of down here where it's got the lowest closed candle, and you set your stop at the high, and um, you can target this previous level of balance, because you know that since the market was willing to do business here, there were both buyers and sellers present. It's likely that if we revisit this level, there will be a healthy amount of business there too. So this is just one way you can add confluence between the tools that are offered here. It's very powerful, and if you study higher time frame levels, you can really get a logical um, you can form a logical expectation for where the market is probably going to find support and probably going to find resistance. And if it doesn't, that means something, right? That's since the market inherently wants to find value, there must be some catalyst or some reason that it doesn't find value in a place of balance, right? And next up, we've got our value area. This is a percentage. So what this will do is allow you to change what percentage of trading activity is contained within your value area. We talked about the normal distribution and the first standard deviation of price. Um, so I leave this on 70, but you can feel free to change this to whatever you want. If I go and change it here to 20, you'll see that the value area gets a lot narrower. Ticks per bar. This will determine the height of your TPO blocks. By default, it's set to 15, but if you want to get a more granular look at the market, if I bring it down here to 5, you'll see that each block is a lot shorter in height. And this will basically give you a finer look at the distribution of price throughout the session. It's especially useful for lower time frame traders, scalpers, intraday moves. They would prefer to have a more granular look, whereas if you're a longer time frame trader, maybe you're swing trading or just buying, DCAing, or whatever it is, this could be good for identifying places where you ought to DCA, right? Because if you bring out the resolution to maybe 30 ticks, or sorry, 50 ticks, and then you go to a weekly distribution, right? You'll have a clear look at where the market wanted to do business this month, and that if we lose that level, that's some catalyst has occurred at this time, causing price to find imbalance, right, lower, and that's why right now we've just lost 100K. I should be trading, but yeah, but that's why I say I should be trading, because these are key levels where if you go long enough back into time, you'll see that the market did range at 100 for quite some time, and it's a significant price level that way, right? That it's a good time to step in and do business because the market has done business before at this level. So yes, I love this tool, honestly. Like it's rooted in the fundamental law of supply and demand, and it's great for forming logical, probabilistic expectations of where price may go. But always remember, nothing's guaranteed, right? So next up, and one last thing for the ticks per bar. Each tick is $5 worth of data. So each box will be $5 high at the lowest level, and if you go up to 2, then it'll be 10, and so forth, and so on and so forth. So I like to leave it 4 or 5 because I personally trade intraday, so I like a granular look at the market. But next up, you got your trading hour label, right? This is the label at the top of the TPO that you can see here. It says all hours because that's the session trading hour that I've chosen. If you go London here, you'll see it changes to London, and it's just you can turn it off if you want, turn it on, just for a quick reference for you. And next up, we've got the POC summary. So what this will do is add a box below the TPO profile that tells you the price level of the TPO, the price level of the value area high, and the price level of the value area low. So this is really good for, once again, if you're trading based on these points of interest, you can easily just set an alert for the value area high, right? And I want to get an alert. Okay, value area high, or custom price right here. Let's set an advanced alert. Um, value area high, breach, right? And you can have 114.572. You can have an alert set for you so that you know when price is entering a level of interest, and you don't have to spend time watching the chart the whole time. You could just wait for that alarm to go off, and then you know it's time to look for a setup. Next up, we've got the volume summary, right? So um, you've got down here your delta, 2.7K, which is a volume denoted in Bitcoin, right? So the volume delta of this day was 2.7K with a total volume of 44.7. Buyers contributed 23.7 and sellers were 21.7, right? So the delta is the difference between this 23.7 and 21,000, right? Next up, you've got the style settings. So this will allow you, just for aesthetics, you could choose whatever colorways you like. There's pre-made ones, and also you can use custom colors if you want to set up your own custom colors. You can put in the hex codes or play around with the shading however you like. Outside VA opacity. Now this will determine the opacity of the blocks outside the value area. If I turn this up, you'll see they'll get brighter. But I personally think it's a good idea to have them pretty different so that you can focus on where the market wants to do business, right? Because that's where you want to look for setups. And then you can, of course, turn off your core components. You can turn off the point of control, change the color, show a label, which is just on the left side here, as well as a naked extension, which we'll get into just a bit. But we have these toggle settings for all the key levels on your chart, and as well as the initial balance range, which I mentioned before. This is the first hour of trading by default. So you could see on this profile that all the A's and B's are somewhere along this white line on the left side of the TPO, right? But you can change this from a 2 to maybe a 4. And what this is in relation to is if it's set to 4 here, it's going to take 4 times your block size. So since this is 30 minutes, 4 is going to contain the first 2 hours, of trading, and that's going to go A, B, C, and D. So you're not going to see any C's or D's outside of this initial balance white line. And of course, you can change the color, make it easier to spot for you if you'd like. Naked extensions was something I wanted to touch on briefly, and I'll go to on all hours profiles to make it easier for us to see. So if I enable naked extensions on the point of control, what this is going to do is extend the naked value forward into time. So what a naked point of control is a point of control that has not been revisited after the session has closed, right? So you can see price came down here, this session closed, the point of control was here, and we continued trending lower. We did not revisit that point of control, so it's still considered naked. Whereas this point of control that got revisited over here, it was naked until this point. And this is the same for your value area low, your value area high. You can put all these on your screen as well as you can show on price scale. Or I'll show this POC here. 108K is where this naked point of control was, right? And it's a little bit off, but we'll fix that. And yeah, so it's good to have these levels on your screen because you can target points of interest and look for where the market wants to do business again. But just be mindful, it can get a little busy, so it's really personal preference if you want to leave these on your screen. Now I'll personally just turn them off for simplicity's sake. And this brings us to poor lows and poor highs. So a poor high and a poor low are going to be indicated by, this is a poor low here because it's the session low indicated by the yellow dotted line you see here. And what this is basically because there's more than one block stacked horizontally, TPO block. And you might think this is like a little bit counterintuitive because you're thinking, oh, there's a lot of trading here. Why is it considered poor? And essentially, what this means is when the market came down, it's a poor low because there were sellers and buyers present at this level, right? So sellers were willing to sell to achieve lower prices, and buyers were willing to buy, and that's why it's a poor low because it did not have a strong reaction off, right? Sellers were willing to push the price lower, but failed to do so, right? And and that's why it's considered poor. Whereas the opposite of a poor level is your single prints here, right? So these are single prints denoted by the red boxes here. And this is where the price moved very rapidly through this price level, right? The market moved very rapidly and did not spend any time here really. And the reason why that is because either there was significant aggression displayed by market participants at this level, or there was just a lack of liquidity. Obviously, there was a lack of selling, which is why the price went up higher, where sellers were willing to step in and buyers were willing to take their profits. But you can see here that um, within the context of the market, right, as the market, excuse me, is trending up, we get this strong impulsive move up, and you might have not caught that, but maybe you were watching it and you saw that okay, now we're getting single prints printed on the TPO. So you can expect that since there was aggression from the buy side pushing price higher here, you can expect that if price revisits this level, buyers will be willing to defend their position or reaccumulate because the strong aggression is what initiates the trend. And they say, you want to trade in the direction of the trend most of the time. You so you can use these single prints as points of reference to look for continuation or reversal of trades. For example, if I find one here, this one here at this high, I didn't get revisited, but this one here did, right? So, or no, it didn't. Sorry, that was in the session. um, if I just quickly look here, excuse me. Um, okay, here. This is a good one to you could think about it as well. It's a little bit opposite of what I was thinking, but so you have single prints here, right? Reflected in this price action in these candlesticks when price came to this low, and then there was aggression, right? Buyers were readily available at this level, and this resulted in an aggressive move up. But in the next session, right, you can see, you can you can watch this box. If I just turn off the TPO for clarity, but I highlight our single print level here, you can watch this level, right? You know that there were aggressive buyers at this level, so you would expect aggressive buyers to maintain their position or defend their position if price revisited. And price did come down and it ranged for a bit. Buyers bought up these wicks, but eventually demand was exhausted, right? Buyers were depleted, and since they were so aggressive, there was an aggressive move down from this level. It it initially served as a point of support, but when that support failed, right, when this state of balance was no longer a state of balance, it results in imbalance. That might be a bit of a word salad, but the range is a state of balance, right? And when the market has some catalyst in it where the buyers and the sellers are no longer relatively balanced, the market searches aggressively for the next state of balance. And since the buyers conceded at this point, right, the aggressive move was to the downside. And you can see, okay, now we're looking for a trade. Maybe we wanted to trade this breakout, right? We could aggregate, we can merge our profiles together, right? Which is another great tool, right? You can right click this TPO and you can merge it with the previous one, so you get a full picture of this range here, right? And so you're looking, okay, while price was in this region, right, it was in a state of balance represented by this fairly even distribution of this TPO, and now you know that you had single prints here who were buying this support level, right? But you know that when price came down to this support level and it was very persistent and there was a lot of business being done, once it breaks out, maybe you want to maybe you want to short it, right? At the breakout of this longer term balanced phase in the market, you're going to need some target to aim for, right? And what you can do is, okay, you can you can look back in time and look where aggressive participants were participating, which was here, right? There were bullish single prints. I say bullish because price went up from here, as well as this point of control here, right? This region here. I've just I've just encompassed both the volume point of control as well as the time-based point of control. And if I turn off the TPO here, you can see that, okay, now I have these points of interest that I can target for trades, right? I can target this on this breakout of this long-term balance, and it's a decent trade, right? And you can think about maybe taking partials here or maybe take your full position, and you know that since this was a previous point of aggression, right, in the market, which was from those single prints we saw earlier, you can look for the reaction. You can monitor the market for the reaction at this level. Either you're going to get buyers defending their position, or you're going to get buyers conceding to sellers, and you get a further sell-off into the next phase of the next price level where the market was balanced, and that's what we see here. So you could get like maybe you want to have a longer time frame trade, and you can target this level, or you want to play a safer game and realize those profits sooner, and maybe you want to split them up into two trades where you're monitoring breakouts between both. Now this, depending on your system, would have yielded different risk reward opportunities for you, but you get what I mean, right? Like these are points of interest that the market sees as pivot points because there's buyers and sellers readily available to do business, resulting in ranging efficient price action. And the market always moves from balance to imbalance and then seeks balance again. And yeah, so the rest of our settings, we have, if I just flip this back on here, and I'll move to a cleaner area of the chart. Now, you can choose what color your pour highs are, right? Pour low. If I make this white, you'll see here it's white. You can have your labels, show on the price scale as well, um, and all that good stuff. And also, you can, for the single prints, you can choose whatever color you want to have them denoted as well as naked extensions. We talked about this earlier. You can extend these forward into time, so you know where the market had an aggressive move. And last but not least, you've got your buy and sell volume colors for your volume profile, right? So you can choose the colors of the buy volume, colors of the sell volume. You can have your point of control highlighted or not highlighted, as well as the value area of your volume profile. So this is one other thing that I really like to track. I'll get into this right after we conclude with these settings, but you can extend these POCs here. You can see the naked extension of this naked volume point of control. You can show it on the price scale, change the colors however you want for the value area, and also you can extend them out into forward into time there. And one last powerful way I really like to use the confluence between these two tools here. If I just turn off single prints for a second, and we'll talk about just fair value, right? Like where is when you're looking for trades, you want to look for the highest probability reactions, right? And if you're trading a breakout, for example, you got to look for high probability targets, right? Um, that makes sense. They're rooted in logic. And same with support and resistance. You want to identify high probability areas of support and resistance. So with these two tools in confluence, aggregating all these exchanges through Kiyotaka, you have the ability to really identify the high probability areas where the market, you can expect it to have a reaction. So, for example, how I like to combine these tools is I'll look at the value area high of the TPO, and I'll look at the value area high of the volume profile. And you can draw a point of interest between the two. And you can treat this as a region where you're looking to do business. And you know that since this was a ranging day, it's a fairly tight range. You have a value area low as well. And as after this day concludes, if you open up or you close off the TPO, you would have these points of interest here for you, so that you're looking for reactions off these levels. And this is kind of a picture perfect example, right? Because it's not always going to be this way. I'm just lucky, but the market opened the next day. You can see here, midnight was here, right, on the Sunday, and it's very low volatility. So maybe you think that okay, Sundays are the weekend. Maybe we get less aggressors in the market, less large players pushing the market in a certain direction. So maybe we expect ranging price action. I like this. I don't know this to be true. I'm just spitting ideas out. But if you open the market up on and you're trading on a Sunday, um, maybe you see that the market's consolidating at this resistance level here, and you expect one of two reactions: either it's going to go up, or either it's going to go down, right? And you wait for a setup. You've got to test these setups and find ones that work consistently, and always play the probabilities, right? But if you look at this price action, you can see that it's making lower highs and it's retesting the same lows, and eventually you get an impulse down, and maybe you want to trade a short based on that entry, where maybe you put your invalidation is the open of this candle or something, right? And now you're wondering, okay, where does it make sense to target? Well, I could target these lows. Yeah, that's probably liquidity resting there. So maybe the market is likely to do business there. But you can also target maybe the value area low, right? Because this is the lower extremity of where 70% of Saturday's business was being conducted, right? And then that leads you to your next setup. Maybe you hit that trade, maybe you didn't, right? But now you know that price is at this support level, and you're looking once again for either up or either down, right? And you get a strong impulse up and a retest of that level here. So maybe that confirmed retest is is your entry signal, right? And maybe you want to get oh, that's a short tool position. Sorry. Maybe you want to get long off that retest, right? So maybe you set your limit for that high, and you have your stop loss at the low, and you want to trade maybe to previous highs, right? Here, or maybe you want to trade all the way to the value area low or value area high and just play this range all day, right? And then price eventually does come up to this high here, and it consolidates once more. And you know that, okay, since the market always seeks fair value, um, once again, it can go either up or either down in that fair value, in search of that fair value. And I would personally, I would play this back down to the lows, because it's a Sunday, and um, breaking out of a point of balance requires some catalyst or strong conviction from one side of the market, right? But for the past few weeks, we've been getting some pretty crazy moves on weekends. So it does break out of this level, and you know that okay, it took a lot of buying by pressure to to push the market above this level, and if it retests and confirms and stays in this level of balance, then maybe I'll catch along to the to the highs, and where do you target? Well, I got to look for previous levels of balance, and you can find those through your TPO. So yeah, this is a bit of a rushed overview of the TPO, but you can see there's so many ways you can use these levels, and you got to layer them in confluence. And since you know that they're backed by probabilities and math, you can not blindly put your trust in them, but you can form realistic expectations for points of interest, and you can design strategies around these key levels. So that concludes the guide. Thank you for watching, and good luck, good trading.